Well, hello everyone. In this particular recording, we're going to be going through some of our homework problems for Chapter 3. In Chapter 3, we were talking specifically about budgeting. Now, once again, just as a refresher, one of the things that I said in Chapter 3 was this. The budget is one of the greatest internal control tools that a government has. And remember the reason for that. The reason for that is a lot of the purchasing in a local government is decentralized. A lot of the purchasing, as you can imagine, is very detail-oriented, very specific. The police department knows what they need to buy. The fire department knows what they need to buy. The Parks and Rec department know what they need to buy. The engineering department, the sanitation department. You get my point. All of these departments are very unique and specialized, and some of the supplies that they need to purchase are pretty unique, and so that is why the purchasing process is decentralized. Well, because of the decentralized purchasing process, the best way to control spending is to pass a budget. Budgets are required for governmental funds, and the budgets are required for all operating statement accounts. That means every revenue account, every expenditure account, every other financing source, and every other financing use account will have a budget account that corresponds with it. Okay. So here's the information for the town of York, the general fund, both operating as well as budgetary account balances at the end of the year, September 30th. So the requirement in this first homework example is prepare the journal entry to record the budget. Well, the budget is recorded as follows. It's recorded in the opposite fashion of the operating accounts. So as an example, to record the budget for revenues, we're going to use this account called estimated revenues. And estimated revenues will be debited. And you have to remember it's recorded in the opposite fashion of the operating accounts. So as you know by now, after years of studying accounting, revenues are recorded with credits. So the budget for the revenues, called estimated revenues, will be debited. Now the expenditures, on the other hand, they are debited. So to record the budget for the expenditures, we will credit those accounts. And the budget for the expenditures are called appropriations. It's just a fancy name. You would think they would call it estimated expenditures, but they don't. They use this other name called appropriations. To balance the budgetary entry, whatever you need, a debit or credit, is going to go to this account called budgetary fund balance. Now I want you all to take a look at this journal entry. See this journal entry here? Well, if there are no budget revisions throughout the year, this exact budget journal entry is reversed at the end of the year. Remember, the budgetary accounts will get zeroed out before financial statement preparation. That is because the only reason we need these account balances is to keep track of what I call the budget balances. Okay, the difference between the budget and the actual. Okay, next question here. Did the town of York engage in imprudent budgeting practice by authorizing a greater amount of expenditures than revenues for the year, or potentially violate town or state balanced budget laws? So the question is saying, hey, well, wait a minute. We're recording a budget for $32,175,000 of expenditures, but only $32,150,000 of budgeted revenues. How in the world can we budget for 25,000 more expenditures than revenues? That doesn't sound like a balanced budget. And the answer is, this is fine. So no, they didn't break any laws or anything like that. And the reason for that is because of this right here that I'm highlighting. Do you all see at the beginning of the year, we had beginning unassigned fund balance of $500,000. That means that $500,000 could be used to balance the budget. That's because it's unassigned. Now, if it was assigned or committed or restricted or non-spendable, certainly we couldn't use that for balancing the budget. But unassigned, we can. So no laws are broken here. Everything is good. And what is the end of year fund balance? Well, we're basically going to roll forward the fund balance from $500,000, the beginning of year number. We're going to add in the regular, or the revenues, not the budget for the revenues, but the actual revenues. $32,190,000. Let me come back up here and you'll see it. And then we're going to subtract out the actual expenditures, $32,185,000. And so your ending fund balance will be $505,000. So very simple problem, in my opinion, just kind of getting used to this new type of accounting and actually recording a journal entry for a budget. And one of the other things we learned in this chapter is not only recording a journal entry for a budget, but also recording a journal entry for when the government enters into a purchase order or an unfulfilled contract. And so to refresh your memory, in for-profit world, whenever we enter into a contract that is not fulfilled right away, but it's just a pending contract, or we issue a purchase order that's been unfulfilled, there is no accounting journal entry at that point in time with accrual accounting. But with budgetary accounting, with modified accrual, using governmental funds, we actually will record a journal entry when we enter into an unfulfilled contract or an unfulfilled purchase order. And that is called the encumbrance journal entry. And so here we have an example where we've got the first month of the fiscal year. The town of Willington issued the following POs and contracts totaling $1,365,000. So like I said, in a for-profit world, we would just throw these POs or the contract in the inbox and wouldn't record any journal entry. But in modified accrual, using budgetary accounting, we're going to record this journal entry here. And as you see it, debit encumbrances, credit encumbrances outstanding. Let me just reiterate what these accounts are. The encumbrance account is the pre-expenditure. It's the step before the actual expenditure. And the encumbrance account actually reduces, the encumbrance balance reduces the available budget, just like an expenditure would. So this is the first step. And then the second step, and I'm not going to get to it here, but the second step is once the purchase order or contract has been fulfilled, you reverse this encumbrance and you replace it immediately at the same time with the actual expenditure. All right, so the same dollar is not going to be in the encumbrance and the expenditure account at the same time. It's a step-by-step process. These are temporary accounts. The encumbrance account, like I said, it's pre-expenditure. The encumbrance outstanding is a sub-fund balance account, most likely assigned fund balance. So this would be a sub-category of assigned fund balance. And that's basically what I wanted to show you there. Now we're going to take a look at a problem where we're going to do both. We're going to pass a budget. We're going to record actual revenues and expenditures. We're going to enter into contracts. So this is a more comprehensive problem. All right, so we have a town of Bedford Falls. They approve a general fund operating budget for the fiscal year beginning on July 1st. The budget provides for estimated revenue. So this is the budget. The budget for revenues will be $2.7 million, and you can see the breakup of where those revenues are going to come from. And the budget also, the approved budget comes with appropriations. So this is the budget for the expenditures totaling $2,650,000, and we see the breakdown there. All right, so the first thing we need to do, which is typically the first journal entry of any fiscal year, we're going to record the budget. And so as we just explained in the prior homework example, to record the budget, you're going to record it in the opposite way of the actual operations. So actual revenues are recorded with credits. So my budget for the revenues, called estimated revenues, they're going to be debited. The appropriations, which is the budget for expenditures, they're going to be credited. The difference between the two, whatever is needed, a debit or credit, to balance the journal entry, you're going to record to budgetary fund balance. Once again, remember, this journal entry is recorded in the beginning of the year so we can keep track of the available balances, simply the difference between budget and actual. That's important, and that's the main reason why we record the budget. All right, so that's step number one. Step number two, we collected revenues. So now we're starting our actual activity. We collected $31,000 in licenses and permits and $12,000 in fines and forfeits. That's a total of $43,000. Journal entry, debit cash, credit revenues. Very easy. All right, next journal entry. Supplies were ordered. All right, so all we did was order supplies. We didn't receive supplies. We didn't pay for supplies. All we did was put it in order. So effectively, what did we do? We issued purchase orders to our vendors to say, hey, we would like to buy $29,900 worth of supplies. So when this order is put in place, we have to record an encumbrance. Once again, in a for-profit environment, no journal entry would be recorded here. We would simply throw the invoice, or I should say the purchase order in the inbox, waiting for receipt of the supplies. But we don't do that in nonprofit world and in government world. We actually record what's known as an encumbrance. Debit encumbrances, credit encumbrances outstanding. And this next step is what I was talking to you a few moments ago. So now we have $29,900 worth of orders. All right, now the majority of that came in. So if we take a look at number three, basically number three says, okay, out of the $29,900 of supplies ordered, $29,100 of that order came in. So there's still $800. Take a look at the original order of $29,900 and the amount that came in, $29,100. The difference of $800 means that there's still some supplies on back order. We haven't received them yet. Okay, now here's the next step. You see that $29,100 of budgeted supplies came in. They were ordered and they actually came in, and they came in at an actual cost. Take a look, $29,200. I want to explain to you that sometimes the actual cost can come in a little above or a little below, or exactly the same as the original purchase order. Maybe there are some price fluctuations that we agreed upon. Maybe there were some shipping charges that we did not budget for. Whatever the case may be. All right, as long as it's close, that's good. So here is the journal entries. There's two. So when the supplies are received, the first thing you do is reverse the encumbrance. And if you take a look at this journal entry B3A, what is it doing? This journal entry is reversing B2, at least the accounts. Instead of crediting encumbrance accounting as we did in journal entry B2, what are we doing here? We're debiting encumbrance outstanding for the $29,100, and we're crediting the encumbrance. And literally at the same time, right after that encumbrance is reversed, we immediately replace it with the actual expenditure. Debit and expenditures, credit cash. Do you see that the expenditure is $100 more than the encumbrance? Sometimes that happens. All right, now what I want to show you are the subsidiary ledgers. I just want to show you this. I'm not going to be testing you on subsidiary ledgers, but I want you to understand how this works. So as an example, the original budget for revenues was here and broken down between taxes, licenses and permits, fines and forfeits, and intergovernmental revenues. If you remember, that was a total of $2.7 million. Now, $43,000 were actually collected, if you remember, from the first journal entry. So the $43,000, $31,000 of it was licenses and permits, and the other $12,000 was fines and forfeits. So as an example, licenses and permits, the original budget was $350,000. Well, we just collected $31,000. So what is the running balance? It's no longer $350,000. It's now $350,000 minus $31,000, or $319,000. what this 319,000 is telling us is that is the amount left that we expect to receive in revenue or earn in revenue. Okay. Now we're going to trickle that down to 0. All right. Then hopefully 0. If it doesn't get down to 0, that means we've earned less revenue than we anticipated. Now the expenditures. This is a little bit more telling because there's really 3 steps to it. And I gave you the formula when we were going through the chapter, but let me give you the formula again. It's as follows. It's appropriations minus encumbrances minus expenditures. That will give you the running balance or the budget balance, the amount left to spend, if you will. So, in the case of general government, the original budget was $500,000, the original appropriations. So at that moment in time, that was the running balance. Now what happened? We ordered supplies of $7,400. So we had $500,000 in the budget minus $7,400. That means the running balance is $492,600. Now when the supplies came in for general government, they came in not at a price of $7,400, but they came in at an actual expenditure of $7,300. So what did we do? Do you remember? We reversed that encumbrance of $7,400. We reversed it. Now the encumbrance has a 0 balance. And what did we do? We replaced it with the actual expenditure. So what happened? The encumbrance was $100 more than the expenditure. So do you see the available balance? It went up $100. We basically earned, I don't want to say earned $100, but we got the ability to order $100 more of supplies because that actual price came in lower than anticipated. So once again, the budget balance or the amount available to spend for the rest of the fiscal year at any point in time, it's appropriations minus encumbrances minus expenditures. And I just wanted to take you down to here. This is kind of the whole summary of it. This was the original budget, $2.7 million. The actual $43,000. So $2,657,000 is the amount of revenues we believe we're going to collect in the rest of the year. And here is for the expenditures. A little bit more involved, but it's the appropriations minus the encumbrances minus the expenditures equals the available budget balance. Available appropriations, as your textbook calls it. Now I want you to zone in on this number. Do you remember this $800? What was this $800? Encumbrances. That's the difference. I'll come way back up here so we remember. Remember we put in orders of $29,900, but we only received $29,100. The difference, $800, those are the order that's on back order. It's still encumbered. That's where that $800 comes from. All right, so all of these homework problems that we've looked at so far have to deal with the governmental fund using modified accrual basis accounting. Now I want you to flip your mind, flip the switch in your brain to do this last problem. In this last problem, what we're going to do is we're not going to be on the governmental funds financial statements, but we're going to go over to the government-wide financial statements. And so what we have here is we have a government, and there's basically just a laundry list of different revenues and expenses in total chaos of an order. And so our job is to take this information and to put it into a format of the government-wide statement of activities. Now it's only partial. Remember, the government-wide statement of activities has a governmental activities as well as a business type activities column. We discussed that when we went through the details of this particular chapter. But for this particular homework problem, I just want to prepare the governmental activities. All right, and with the governmental activities, the government-wide statements, there's really 2 sections. We have basically a top section and a bottom section, and it works like this. So on the left-hand side, we're going to list out our primary functions or our programs. It's not broken down by fund. You can see it's not on the left hand. It's not like we have general fund, special revenue fund, capital projects fund, debt service fund, etc. No, we break it down by function or program. And the first column is coming over to the right? We don't read this statement top down. We read it left to right. All right, so that's kind of weird, but that's the way it is. So the first column is not revenues, but expenses. And so here are all of the direct expenses for general government, public safety, health and sanitation, culture and recreation. And this last number is considered an indirect expense. It's interest on long-term debt. And because that debt is to service multiple functions or programs, we're not going to try to allocate it to the different functions or programs. We're just going to state it separately, and that's called an indirect expense. So we have 69 million, these numbers are in thousands, $69.5 million in expenses. And after that, we have 3 columns for what we're going to call program revenues. Program revenues are basically revenues derived directly from operating those functions or programs. There are 3 subcategories of program revenues. The first one, charges for services. That's the government charging the users, like you and I, the users of the community. Also, we have operating grants and capital grants. If you add them all up and then subtract out expenses, we get a net. In this case, it's a net expense, negative $50.9 million. And then what we do is there's a second half to the statement of activities, and that is called the general revenue section that I'm circling here with my cursor. In the general revenue section, you are going to report all taxes derived from the government. And so in this case, we have property taxes. And any other revenues that really aren't dependent on an individual function or program. They're general. They're not specific program revenue. So unrestricted grants, investment earnings, and we have the subtotal. And we might have any special or extraordinary items. In this case, we have the special items. Another subtotal, $62,931,000. What we're going to do is we're going to take that number and subtract it from the net expense of $50,960,000. You'll get this $11,971,000. That is the change in net position. If this was a for-profit company, we would call this number net income. All right, but it's not a for-profit company, it's a government, so we call it change in net position. We will take that change in net position, add it to the beginning net position, and we get the ending net position for the year, $13,614,000. This number that I'm circling will agree with the net position on the government-wide balance sheet.